Joining us now to discuss the crypto markets is Defiance ETF CEO, Sylvia Jablonski. Welcome back, Sylvia.
Thanks for having me. Good morning.
Glad to see you again. So 19,000, we're back, aren't we? What's causing this? I mean, when we look at the options market here, we have something called the volatility smile. We're seeing out of money demand for options out of the money. It's kind of curved up a little bit, yet we're seeing also too on the downside there some of the strikes on the puts also kind of having a little bit more interest. It seems like, at least from what I'm gathering on this thing. What are your thoughts going on here and looking at all this?
Yeah, I think, when you see the pickup in out of the money calls, that tells you that you have some sophisticated traders, I think, that are bullish on Bitcoin and think that this is the year of recovery. But I think that, the story is going to sort of mesh with the market and with overall risk assets, right? If you look at NASDAQ, for example, which had a pretty decent correlation to Bitcoin pre-FTX and some of these other issues that kind of, just really put it out of whack. That index has been up really since the start of the year, and that's been on positive CPI or an expected CPI number. It's been positive on the idea that the Fed is closer to the end than the beginning of interest rate hikes, and recession doesn't seem like it's hit us just yet. And I think that it's been that same thing that's really propelled it forward. And I think that some investors that are getting a little more comfortable with putting some cash into play are thinking about this and thinking that, a lot of this is shaking out now with Gemini, FTX and whatnot. And the price of Bitcoin has been hit, but it's still an asset that is up thousands of percentage points since, 2016. It's an asset that started to become commercialized. And I think once you you talked to your last guest, I think once you shake out a lot of these regulatory issues, these legal issues, and you get people comfortable with the idea that, this is a stable asset class, you might start to think that Bitcoin could recover this year if the broader market recovers this year.
Are we seeing kind of the return? So you're saying, in other words, we're seeing the return to correlation with, let's say, the NASDAQ, something that we saw pre-FTX. There was this time over the summer when every time the equity markets would go up, we'd say, "Oh, look, Bitcoin's up." No surprise, they're tied together. Do you think that we're seeing now some of that, plus some bargain hunting, plus, and even I'll say the return of the meme stocks? I was looking at Bed Bath & Beyond, and that thing is up like something like 4x over the past, or 5x over the past few days. So it seems like people, particularly on the fringes of retail at least, are starting to pick up on the risk trades again. Do you think that that's happening in the face of all of these headwinds, such as higher rates, such as more shakeout? That's kind of like what you're saying, that there's some bargains, that people are looking for bargains?
I think it's a bit of a toe dip. I don't think meme stock mania is going to come back. I just don't. Too many people got burned on that. The greater percentage of traders that went into the AMCs and the stocks like the Robinhood and things like that just got absolutely crushed. So it's kind of like they're not going to touch that burning stove again, right? But I think that Bitcoin is a little bit different, right? That there is this commercial argument for it. You started seeing products like ETFs come out and trust funds like what Grayscale offers, which give investors access to cryptocurrency, and that sort of became accepted. So I think that Bitcoin's going to trade in line with risk assets. The one caveat to that is if we keep getting more news like FTX, like Gemini, even Binance, right, where you see billions of dollars of outflows in the first couple of days of the year. And, until that kind of smooths over and we see, the path forward in terms of regulation and things like that, I don't think it'll soar, right? But I do think that here along the way, as we see markets rally a little bit, Bitcoin will participate in that in a small way, and it'll trade in line with the tech index. But recession, earnings getting crushed, inflation remaining high, all bets are off.
Sylvia, what are you seeing on the ETF front for crypto in terms of volumes and institutional activity?
So I would say that it's lower than ever. If anything, there's been a lot of interest, or there was a lot of interest in the first couple of days of the year and the last couple of months of last year in the inverse funds. So whether it was an IBIT or whether it was a short futures fund, things like that, we saw investors coming in there because obviously they garnered great performance, right? But in terms of the long funds, I think if anything, you've seen a real decrease in flows into the different long crypto related products out there, because investors are just, I think you have to get an investor convinced that he or she should buy Apple and Amazon before you can get them, the average investor, to buy cryptocurrency, right? Of course, you have the crypto experts and whatnot that'll continue to trade this, and they'll bargain hunt, and they'll sort of look for value creation propositions here and hold it long term. But the average retail investor, which is a lot of why Bitcoin soared, that large mass coming into the market and buying up the price, they're not back in yet, right? So I think that it'll take some time before you convert them.
All right, real quick question, and I'm embarrassed to ask it, but nonetheless, it's my question, so I have no shame. What do you think we see next? We're at 20,000. You think we see 15,000 or 25,000?
Oh, okay. So we're pretty close to 20. So I'll say that we'll see 20 before we'll see. Yeah. Okay. So we'll see 20 before 15 for sure. But I don't think we're going to see 25, at least in the first half of the year. And I think that we could see 15 before we get to 25, if that makes any sense. So I think we'll hover around 20, catch a bid now. If the market pulls back, earnings are rough, I think we get 15. When we get out of that, recession mindset, and we sort of move on and markets begin to recover, we get to 25. I do think we'll see 25 within the year.